I started on cleanup just like you guys. But now, see, I'm washing lettuce. Soon I'll be on fries, then the grill. A year or two, I make assistant manager. And
that's where the big bucks start rolling in. Hey guys, Tom Gentile, welcome. Welcome to the program here. It is now Tuesday the 28th of April 2020. Let me get out of that for a second. What's a little bit of trading without having a little bit of fun here, huh? I love that clip, Coming to America. And it's funny because Louis Anderson got his first big break from Eddie Murphy by actually picking up his lunch tab somewhere. And Eddie Murphy loved that so much, he said, you know what? I'm going to cast you as a bit part in my upcoming movie. Stuck him on that movie. And of course, as they say, it goes from there. Glad to have you here, guys. We got a great program for you here. So I'm going to go ahead and do what I typically do. Stocks, bonds, currencies, commodities. We're going to look at it in the intraday view today. All right. We'll check and see if there's anything happening. Probably take a look at Facebook here before earnings happen today. And of course, I've promised you this. We're going to get into it. The burger wars. All right. We're going to take a look at McDonald's versus Burger King. Not the taste preference, perhaps, but the financial preference. And so I want to look at that. I want to look at compare and contrast. And then we're going to take one of these companies and we're going to compare and contrast the stock versus the options. All right. I'll also be checking in on your comments and questions. So feel free to put those in today and we will get started right now. Let's go ahead and go. So let me change direction here and I want to share my screen with you. So let's do that once again. And like I said before, my plan for today is as follows. I want to look at our daily numbers. All right, SPY, TLT, UUP, USO, GLD. Actually, I want to look at the intradays. We looked at the daily yesterday. We'll come back and take a look at those daily numbers again a little bit later on in the week. Stocks on my radar today. I'll look at Facebook earnings as they're coming up. And then, of course, we'll be talking about burger wars. All right, so got a little poll for you that I want to run. And so I've got to create this on the fly. So here is my poll for you. McDonald's or Burger King? Which do you prefer? All right. I'm going to say MCD is option A. BK is option B. And neither is going to be option C. Did I spell neither correct? Neither. Didn't do it that time. Third time's a charm. Neither correct. Let's create the poll. Open it up. You guys can start the voting on this one. And I'm going to show that poll in just a few minutes as we talk about the markets. So let's roll over. Hey, you know what? I got to tell you, I was not a happy camper when I woke up at 6 o'clock this morning because, again, highest unemployment that I've ever seen. All right. Money just being dolled out everywhere to prop up these businesses. And I took another bearish position. I added to my bearish position on the S&P yesterday. Thought I had a good fill. And then last night even looked better. Then I woke up this morning. I'm like, whoa, what just happened? But things have changed a bit since 9 o'clock this morning. And I'm going to show you what I'm talking about as we go through each one of these. Let's start with SPY. Now, SPY, I want to show you what happened to me. So yesterday, I'm getting filled on the short side right in here, quarter till. I mean, I almost top ticked this end of this day here. And then, of course, we drop. And then we're down even a little bit lower last night. But again, things can change between what happens when you go to sleep at 2, 3 o'clock in the morning, you back up at 6, because that's what happened to me. And then so I'm back up. And of course, when I look at the clock and then I look at the stock market, and of course I'm like, I can't go back to sleep. Is it because I risked too much? No, not really. It's because I just, sometimes I just wonder what is going on with this market when everything I have is telling me it needs to start going lower and it doesn't. And so then I get my cup of coffee, start looking at what's going on. Well, this is the bell, 9:30. And so we had a high of 291.40 on SPY. This is during the New York market. So that's the high today. It's literally the opening few minutes, because then we started falling off. Here we are, it's 10:30. We're hitting the lows, and it didn't even wait. It didn't even look to retrace, and we started dropping down even lower. And so now we are lower on a day, which is starting to make me feel like this market does want to cooperate and move in the direction my systems and strategies are telling me it's supposed to move in. Let's take a look at the comparables when we look at things like TLT, right? Which is on now. Check this out. TLT actually had a pop in the morning. It popped up with the market, which didn't make a whole lot of sense. Why is the bond market moving up when the stock market opens up? But what happened next was what really kind of came clear, is that bonds continued to move higher, suggesting that the stock market was overdone today. And we are bumping along the top tick of this, the top first hour of the range for TLT. That's at 168.99. And of course, the low for the hour is 168.45. Now, the bonds are actually up 0.8% today, while stocks are slightly lower. Let's take a look at cash, UUP. So UUP is also suggesting that we got a little bit carried away this morning in the stock market. The low on UUP today on the open at 9:30 is the low so far. We've managed to climb out. Actually, we opened at 26.97 and we started moving higher. We're back up at 27.05. We're back up in the green area here, which again suggests that traders are piling back into the cash. Cash and bonds right now are king. Okay. Dare I even look at the next ETF? Do I even look at it, guys? Let's take a quick look here. USO. And again, USO is trading lower. After that ridiculously low day we had yesterday, we are at the lows of today. I believe today is the last day USO is trading at this price because I believe that reverse split is going to occur after the close today. So tomorrow the price will go up. But the number of shares that one might hold in USO is likely to go down when the price goes up, because that's what a reverse split does. It raises the price but lowers the amount of shares that you hold. All right. While I'm on the subject, as we look at USO kind of trudging along the lows here again today, why isn't this a good buy at this price? Why do I believe? Because I got this question all day long yesterday, and I couldn't answer it because I was in focus. So I'm going to answer it right now. Why do I not like oil right now? Well, there are a couple of reasons. Number one, there's too much of it. Number two, there's no place to store it. And number three, the futures traders already are building this and continuing to build this into future prices. But the big one that I got was the big yellow warning sign when I logged into my account, what was it, a couple of days ago, that said that they were only accepting closing orders in the June and July contracts. So I showed you this yesterday. While we're down 1.83% on USO, if you take a look at the futures contract, the underlying contract that they finally got out of, it's down 6.34%. So they rolled into July. All right. So what's July look like? CLN 20. And that's down just slightly, 0.6%, as it's trading at $18.09. So they sold, the USO managers got out of June, got into July, but now they're actually getting into August because they can't get into July. So what's the Q contract trading at? Q is August. August is slightly higher. So here's the thing. When you're getting out of something and you're the biggest hedge fund manager in the world and everybody knows you got to get out of it, it's going to get priced lower. And hence, if you're getting into the same product but a different month, that price is going to be bid up. That's why you see the August contracts actually slightly up on the day. But then when you look at the front month, which is closing only, All right. Closing only is closing out at minus 6% right now. Right. With a low sitting down here at 430 that was just above 10. You know what? It would not shock me in the least if we see the June contract go down to zero as well and possibly even negative. But we've got a few more weeks before that actually happens. All right. Thing is, none of us could take advantage of it if we wanted to short this because they're only accepting closing positions. All right. Stocks, bonds, currencies, commodities. Let's go look at gold, GLD, because last night it was slightly down. All right. And this morning, same thing. Open lower. All right, drop down to a low, and the high is 160.98 right now for the first hour of the day. The low is 159.16, and we are almost smack dab in the middle. Okay, so let me be clear on what I'm doing with gold and GLD is that I am attempting to purchase GLD by way of selling puts. And for the last couple of weeks, I have not been able to get it because those have been expiring worthless, which is fine because I'm happy to take the premium. All right. But I'm in the 160s right now ending this week, and I might end up getting myself some gold here if we are below 160 by Friday. So we will see. All right. But I do like this. I think this is one of the best places to be at in an area where you're seeing a finite amount of gold. All right, you can't just print more gold. You have to go dig it up, and that costs money. Another area that I wanted to mention is Bitcoin. And for Bitcoin, we could look at, there's a variety of different places we could go and look at Bitcoin. I'm actually going to bring up one of them right now, which is a company called coinmarketcap.com. So CoinMarketCap actually rates the top 100 cryptocurrencies by market capitalization. And the number one cryptocurrency by market cap, and it still is Bitcoin. And Bitcoin is now trading above $7,700 a share, or a coin, excuse me, not a share, but $7,700 per coin. As you can see here, this is where what we're gonna look at. Let's look at the year in checks. So Bitcoin did a lot of what the stock market did. It had highs there in the mid-February. All right, it pulled back really hard by mid-March. But it has recovered quite well here as we're now approaching 8,000 on Bitcoin. We haven't seen 8,000 since the beginning of March when the drop started to occur. So the thing I like about Bitcoin is there's a finite amount of coin out there. And so because of that, and couple that along with something called halving, which is going to happen in May. All right, there's going to be the rewards are going to drop in half starting in May, which means that there's going to be less of this that's going to be coming on the market. Eventually, it runs out. All right, so this is something else that I like as an alternative in the fact that if the fact is that SPY is now and the stock market is now considered to be going lower as we go through earnings. All right, so here we go again, SPY, highs, lows, and right now sitting in the bearish camp. Of course, the rest of the day we have to look at. The stock that I wanted to cover before I get to the poll, and if you're just jumping in, guys, I put a poll out there for you. I'd love you to answer it for me. McDonald's or Burger King, which do you prefer? All right, and I'm not talking about the stock, although I do have the stock symbol for MCD up there, but McDonald's, Burger King, or neither. Put your votes in. I'll publish the results in about 2 minutes. So Facebook. Let's take a look at Facebook. Facebook was up on the day, and it was actually higher. If we look at yesterday, we had that close that we had a higher high. We opened higher. We were trading at 189.19, and then the drop came in. First hour of the day high was where we opened. First hour of the day low is 184.37. Currently trading at 185.14 ahead of today's earnings. So we have earnings coming out on Facebook here at the close. And if you take a look at Facebook, I want to take a look at another chart of Facebook. Let's look at the daily chart. You can see what's happened to it over the course of the year. So this is the year this is actually 2020. So you take a look at 2020, we can see that back in January, hit a high of 224.20. COVID-19 kicked in, took it all the way down to $137.10 before rebounding, and it was above 190 yesterday. All right, opened above 190, closed below, have another close below. Where is this stock going in terms of earnings? All right, don't know. All right, we could take a look at, and one of the best places to go is a company called, if you haven't used this before, earningswhisper.com, because they give you not only what the street consensus is, but they also give you the whisper number, all right, the number that they believe is likely to come in. Now, one thing I've noticed about earningswhispers.com is that it is taking a little bit longer than normal to come in and give me anything on earnings, maybe because so many people are hitting the site at the same time. But I'm going to go ahead and type in Facebook, and we're going to take a look and see what it's got. Consensus is 172. Let me blow that up so everybody can see it. The consensus is down here, 172. The earnings whisper is 181. So they're expecting it to be on the high side of consensus. All right. Wednesday, April 29th. My bad, guys. I think that I had that in my notes yesterday, but that's what happens when we do these live events. I go live, I get so excited, and then, of course, what do we have? Google is on tap today. My bad. Let's take a look at Google. I got so excited about Facebook, I completely passed over like I thought today was Wednesday. All right, so here's what we're going to do. I am going to come over, and I'm going to reset the ticker, GOOGL, in the Earnings Whispers area. Let's take a look at Google. Google's whisper is actually below the consensus. They expect Google to come in below the average consensus. They think it's going to be a bit soft. We could use that information if we really wanted to, all right? But let's take a look at Google at Google's chart, price chart. We'll take a look at Facebook tomorrow. No one needs to look at it today. Google. So Google had a similar route to Facebook. Let's talk about the high, the COVID high, back in the middle of February, 1530.74. Low was 1,008. So it had about a third, gave back a third, bounced back, and it was trading very close to 1,300 yesterday, 1252 today. And we see now, I see that earnings is on tap here. And if you come over here and you put your mouse right on top of that, it's going to come up and tell you there's a conference call. And that also, it sometimes will give you those estimates, but typically that comes after the earnings are announced. But we have that information right here with consensus on earnings whispers. So from there, it's just a matter of, are you bullish, are you bearish? What would you be interested in looking at? Let's just take a quick peek here, and I'm going to go into tomsoptiontools.com, and I am going to go into the options chains for Google. So GOOGL. I'll blow this up in a second, guys, so you can see what I'm looking at here. Let's look at the May options, the ones that expire in 3 days, because that's where all the excitement is right now. And I'm actually going to bring this down to 5% above and below the stock price. That's still going to be a lot of different options out there. So 1256.45. The 1255s are 35 points if you buy the calls, if you think Google's going to be going up. The 1255 puts are 34, so almost the same price, right? So these are very expensive. Now, one thing that I've never showed you before is the ability to go in and actually look at a symbol. So if you were bullish on Google, I can actually go in and click on, in my tools, I can click on and look at charts within Google, not just the price chart for the last X number of days. But take a look at this. This is the bid and the offer. See how wide they were, how wide they've gotten in the past? Now they're coming together. They're actually coming together because we're getting a little bit of a slowdown. The markets aren't as scary as they were a month ago. This is the implied volatility, which back at the beginning of April, all right, was trading down around 40. At the end of April, as we're getting close to earnings today, the IV has almost doubled in value. And then they've got other things on here, Greeks such as delta, theta, gamma, vega, etc. But I wanted to show you the different option charts. This is the IV, by the way. This is not the average IV. For those of you that are option smart, this is the IV for what? for that option I just showed you, this call option. This is the 1255 calls. So this is the price of the 1255 call, what it's been doing. And then, of course, you got your bid and your offer, and you got your IV. Very, very important stuff if you're looking at options. On the put side, we could do the same exact thing. We could look inside the 1255 put. And what we're going to find is something very similar. All right. Stock price, put, bid, ask. And then, of course, the IV, which is going up on the put side as well. That is for the 1255 put. So I don't want to be buying these options. I want to be selling them. And I can sell them a number of different ways. We could actually vertically spread them and create a trade where we could be right if the stock goes down. But even something that's a one-to-one is very close to the stock price right now. All right. So let me throw the published results out for our poll. You know, the poll I just gave you. Remember the poll I was talking about? McDonald's or Burger King, which one do you prefer? Here you go. McDonald's, 41% of the group in here right now is preferring McDonald's, 24% Burger King, and 34% neither. Almost looks like a stock poll. Are you bullish, bearish, or neutral? And it's almost across the board. Some of us like the two whole beef patty, special sauce, less cheese, pickles, onions on a sesame seed bun. Some of us like the flame broiled Whopper, and some of us either are vegan, vegetarian, or maybe we like to cook our own burgers at home. All right. But the reason I brought that up is because it has to do with what I want to discuss next. And that is, as we get into McDonald's and Burger King, I want to actually talk about each of these. And I want to get into them a little bit more with you and talk about pros and cons, etc. All right. Alex, you're right. The poll's really matching the market right now. So here we go. Let's take a look at each of these. And the reason I'm bringing these up is that McDonald's does have an earnings report coming out Thursday at the close. Okay. So let's look at a quick scan, fundamentals, technicals, and then we'll look at each, and then we'll do a comparison of each. So fundamentals, last quarter, McDonald's actually had $5.35 billion in rev and actually had net income at $1.57 billion, up 11%. This is a recession-resistant company, as fast food in general is, but this one most definitely because, first of all, it's a cheap alternative. If you're stuck indoors for 2 months and you want something to eat that's hot, but you don't want to go out to get it, McDonald's has delivery. All right. A lot of these guys have delivery, but McDonald's has really been leveraging that delivery. Also, because they have alternatives to dining, they also have the ease of adapting to a variety of conditions. McDonald's is it's placed pretty well to weather this storm. And also hedge funds have added on to McDonald's and have added on by the tune of about 15% in the last year. So that's the pros of McDonald's. All right. The cons are the bigger they are, the harder they fall. That might be a con for McDonald's, but let's take a look at the chart right now on MCD. You can see what I'm talking about here. MCD had highs just a little bit south of 220. The lows came in down here right in the middle of the screen, and this was around 125. And then, of course, you've got to current price around 185. Now that's 70 there. That's not the price of McDonald's. That's the implied volatility of the options. Options were the highest around the middle of March when the stock was trading at its lowest. So implied volatility, or what the option traders see, is almost an inversion of price. Do you see that? Stock comes down, goes up. IV goes up and comes down. IV's trading above 40. All right, nowhere near the lows of 15 that we saw in February, but still, this isn't that bad, considering that the implied volatility on a fast food chain was trading over 100 in the middle of March. Let's take a look at Burger King. The Impossible Whopper, is now part of Burger King's merchandise, but Burger King doesn't own their own merchandise anymore in terms of a company. They sold off and were acquired by a company called Restaurant Brands International. And Burger King is just one of several brands of this company. Total rev last quarter was 1.48 billion, earnings around 165 million. So as you can see here, they too, I mean, they had lower rev, lower earnings. But again, if we were to back this truck up for a moment, and let's look at rev to earnings here, their earnings were about 20% of rev. And with Burger King, or not Burger King, but QSR, which Burger King is a part of, their rev was not 20%. It was more like 11%. Growth on McDonald's was 11%. Growth on QSR was much less. Now, the risk in Burger King is because they are under the QSR brand, you have other companies in QSR that also push the stock. All right. And so because of that, they do have some risk, even though I think Burger King really played it right. The last couple months, they've been out in front, not just with Impossible Whopper, but they've been out in front with some really great ads on traditional advertising. But you know what else they were doing? They were attacking on social media. They were attacking on Twitter, on Facebook, on Instagram, and really telling their customers that they were still open for business and that they understood what was going on. They were the first ones of the fast food franchises to get out front and center and let people know they were still open for business and they were going to take care of their customer. I love that commercial that they did with the couch Patatrian. Right? If you know what I'm talking about, with the guys that our country needs us to be on our couches. Great commercial, by the way. But when you compare these two, the first thing I do is I look at the information, but I'm also looking at charts. And so to look at the chart of Burger King, I see something, or QSR, that's something very similar. All right, high 60s pre-COVID-19, low like 25 during COVID-19. And then there's the rebound that took it back up into the high 40s. Right. So same thing. You had a plummet, you had a recovery. You also had option implied volatility, which take a look at this. So their options IV was down in the high teens, and it jumped as high as 220 and came down, but still trading just south of 70. So let's draw some conclusions. I can't get it out this morning. All right, McDonald's versus QSR. Fundamentals, McDonald's takes first place here with much more revenue, earnings, and growth. Technicals, it's a draw because you're taking a look at the fact that both of these charts, even though their prices were different, all right, the percentage drop and the percentage recovery were pretty much the same. And both of them had better looks to them than the overall market. On the option side, though, look at that red line. Trading the red line, McDonald's has lower implied volatility in QSR, making their options cheaper on an option price to stock price ratio. So what I want to do is I want to look and see what's going on with the options versus the stock. All right. So let's take a look here. And again, we're talking about going in and being careful with our step 1, step 2, step 3 process. All right. So let's slide over and let's bring up some options on McDonald's. And I'm actually going to be out. I'm going to look out a year. I'm actually going to look out to 2021 here. So take the options on MCD because we can buy the stock right now. Does everybody know that? The stock we could buy, it's going to cost you $185 a share. So let's say 100 shares is going to cost you $18,500. All right, $18,500. Or what we could do is we could take a trade all the way out to January 15th, 2021. Does everybody see that there? All right, January 15th, 2021. I'm going to update this trade, and then I'm going to come down. I'm going to look at the call options on McDonald's. All right, so here we go. Look at this. So this is way out there, 8-9 months to expiration. If I were to buy the 190 calls and sell the 200 calls, what could I do that for right now? All right, I could do that for less than $5 for the contract, or $478 for the actual spread. So that involves buying the 190s. Look at that. They're almost $18. and you sell the 200s for $13.20, and you're talking about putting this whole thing together for about $480. All right, that's for the actual spread. Buying the lower strike, selling the higher strike. So what we're basically doing is we are renting this stock. All right, and what we're looking at is we're renting the stock between $190 and $200 a share. And we have months, many months before expiration. And if McDonald's is above $200 a share by expiration, then we have a chance of more than doubling our position right here. Now, in order to double your stock position, what does McDonald's have to do? It has to go from $185 a share to where? All right, where does it have to go? It has to go to $370. $370 a share is going to be the double on the stock. The double on this option is 200 or higher by January 15th. All right, the risk on McDonald's stock is what you paid for it. The risk on these options is no more than you paid for the option. So if this takes a complete dump and goes back down to $135, all right, you're going to be down $50 a share on the position. If it dumps down to $135 and you own the spread, you're down no more than what you paid for the spread, which is $500. All right, guys. Hey, that's it. Thank you very much for joining me today. Tomorrow, come on back. We're going to discuss, I'm going to get into, other than stocks, bonds, currencies, and commodities, I'm actually going to get into looking at channels. All right, we're going to look at channels, the buy and sell side channels. I'm going to talk about a system that we trade using channels. So until then, have a great rest of your day, and I'll see you tomorrow. Same time, same channel. Bye now.